It's IRA season, so I've got 3 ideas for your latest contribution. The first will likely dial up risk, the second is a more moderate allocation fund, and the third is a bond fund, albeit on the riskier end of the spectrum. If you're retired, you might want to dial it down a bit, but if you're on a ways from retirement, you might want to stay aggressive. First off, I have Fidelity Overseas, a silver-rated foreign large growth fund. When you think of Fidelity, you think of stock pickers. And Vince Montemajoria is one of the better ones. He's a studious investor who's always working to improve his process. He looks for quality companies, but he also pays attention to valuation more than most growth managers. You can see that in the way the fund has stakes in financials and industrials are actually equal to its tech weighting. Also, European countries like the UK and France dominate rather than fast-growing Asian markets. Now, 12 years into his time at the fund, Montemajoria is comfortably ahead of peers and benchmark. Next is a gold-rated T. Rowe Price balanced fund taps a team of excellent investors to build a wide-ranging portfolio. The fund holds about 65% in equities, though it can adjust that amount a little bit. The result is a pretty diffuse portfolio, but one still very much capable of beating benchmark and peers. The fund holds a decent amount of foreign holdings, reflecting T. Rowe's excellent reach, and really you could make this your sole fund in your IRA. Finally, we have silver-rated Vanguard High Yield Corporate, which is mostly managed by Wellington Asset Management, with a portion going to Vanguard's in-house team. The fund takes more credit risk than a core bond fund, but less than most high-yield funds, so it's pretty reliable. The fund charges just 0.23% a year, which makes it quite a bargain for an actively managed fund.